The AI revolution is rewriting the rules of investing. Imagine a world where machines don't just calculate, but create, where stock prices swing not just on quarterly reports, but on lines of code. This isn't science fiction, it's today's reality. But here's where it gets controversial. Are we witnessing a golden age of innovation, or are we teetering on the edge of a speculative bubble? Let's unpack how AI is reshaping markets and what it means for your portfolio. And this is the part most people miss. The true winners aren't just the obvious tech giants. They're the ones quietly building the infrastructure that makes AI possible. The global stock market is in the throes of a seismic shift driven by AI's meteoric rise. This isn't just about smarter algorithms. It's about a fundamental reimagining of how industries operate. By 2025, AI spending is projected to surpass $1.5 trillion, a staggering leap from just a few years ago. But what does this mean for investors? It means the old playbook is obsolete. You can't just diversify across sectors anymore. You need to understand the AI ecosystem. Companies like NVIDIA, Microsoft, and Amazon are no longer just software providers. They're the architects of the next computing era. Yet, even as these giants soar, critics ask, is this growth sustainable, or are we creating a new kind of Magnificent Seven bubble? Let's talk about the real game changers. The AI tsunami isn't just about flashy tech stocks. It's about the invisible backbone of innovation, the chips that power AI, the cloud platforms that store its data, and the software that turns raw code into actionable insights. NVIDIA's Blackwell GPUs sold out by 2024. That's not just a sales win. It's a sign of a bottleneck forming in the AI supply chain. Microsoft and Amazon's cloud divisions are booming because they're the gatekeepers of AI's scalability. But here's the twist. The real risk isn't just in overpaying for these stocks. It's in overlooking the smaller players, those developing niche AI applications or solving the energy crisis of training massive models. And let's not forget the losers. Traditional industries are facing a reckoning. Can a factory worker compete with AI-driven automation? Can a financial analyst outpace a machine learning model that processes millions of data points in seconds? The answer is clear. Only those who adapt will survive. But this raises a provocative question. Is AI the great equalizer or the ultimate disruptor? While it democratizes access to tools like generative AI for small businesses, it also concentrates power in the hands of a few tech titans. Regulatory bodies are scrambling to catch up, but as history shows, innovation often outpaces oversight. Will we see a repeat of the dot-com crash, or will governments finally get ahead of the curve this time? Looking ahead, the AI landscape is a roller coaster. Short-term volatility is inevitable as markets grapple with breakthroughs like quantum computing integration or ethical AI frameworks. Long-term, though, the potential is staggering. Imagine AI managing entire supply chains, optimizing global logistics, or even co-creating art and music. But with this power comes responsibility. Who decides what AI can and can't do? How do we ensure fairness when algorithms are trained on biased data? These aren't just technical questions, they're moral ones, and they'll shape not just markets but societies. So what's the takeaway for investors? First, don't chase hype. A company's AI strategy must be tied to real-world applications, not just buzzwords. Second, diversify smartly. That means investing not just in the winners, but in the companies solving their problems, like firms tackling AI's energy demands or those building ethical oversight tools. Third, stay informed. The AI race is moving at breakneck speed, and the rules are changing daily. Those who ignore this will be left behind. But here's the final thought. Is AI the key to the next economic boom, or are we setting ourselves up for a crash? The answer isn't in the data. It's in your choices. What's your strategy? Share your thoughts in the comments. After all, in the age of AI, the only constant is change. And the best investors aren't just riding the wave, they're learning how to ride it without drowning.